Hi, everybody, and welcome to this week's 5-minute Chicagoland real estate update. I'm Joe Enzbigilis, team leader for the Enzbigilis and Tierney Group of Keller Williams Experience, and I'm extraordinarily grateful to be here, earning my spot as your economist of choice for the Chicagoland real estate market. Today, we're going to dive into the two I's that are affecting the Chicagoland real estate market. That's interest rates and inventory. So interest rates have been pretty volatile throughout the first quarter of 2023. And the Fed has shown no signs of slowing down in their efforts to ease inflation. Inflation is extraordinarily high across the board. We're all feeling the pain of that, right? Every time we go to the grocery store, we're spending more money than we were at this time last year. Our energy bills are up from last year. All of this is creating a crunch on the American consumer's wallet. And what's interesting is that consumer spending is still really high in spite of this. So the Fed is determined to continue to raise rates and try to drive inflation down. So what we've seen so far this year is mortgage interest rates for a 30-year fixed conventional mortgage going back and forth between about 6.5% and 7.3%. Right now, the current going rate for a 30-year fixed mortgage is right around 7.3%. And we are seeing pre-approvals anywhere from 6.8 to 7.3, but most banks are in the low 7% range right now. Next week will be a very big week for really all things financial. We're going to be monitoring the situation with the Fed very closely and give you a gauge on where we think interest rates are going to be going after next week's Fed meeting. But for right now, mortgage rates are right around 7.1, 7.3%, which, by the way, is the historical average. If you look back in recorded history with mortgage rates, the historical average is 7.1%. The only reason interest rates feel like they're outrageously high for most people is because we had 2 years, almost 2 years of artificially low mortgage interest rates. Okay, the Fed was doing the opposite at the start of the coronavirus pandemic to ensure that Americans were still spending money in the economy. And they were trying to combat all of the negative financial impact that the coronavirus pandemic was having and wreaking havoc in our society. So rates were artificially low for a year and a half to 2 years. That was not reality. Those interest rates, we may never, in my lifetime, we may never see interest rates at a sub 3% rate again. There's no way to know for sure, but it's not likely given that the historical average is 7.1. So for buyers, if you are in the market to buy because of something that's going on in your life and you need to purchase a home, it is not a bad time to buy. Remember, my favorite phrase, marry the house, date the rate. If you buy a house on a 30-year mortgage at 7.1%, you can always refinance down the road when rates come back down. Most of my cohorts in the mortgage industry are expecting to see interest rates somewhere around 5.5% in the not too distant future. So keep that in mind. You can buy it today based on what's going on in your life, your needs to purchase a home. You can buy it today at 7.1 or 7.3% interest and then refinance when rates come back down. For sellers, the second I topic of the day is inventory. Inventory is historically low throughout all of Chicagoland. Okay. Every single county in the Chicagoland area has a month's supply of inventory of less than 2 months. In many counties, we have right around 1 month's supply of inventory available. So some perspective around those numbers. Month supply of inventory is a measure of how long it would take to sell every available home that's on the market at the current sales rate. So based on buyer demand, how long would it take for every single available property to sell if no new listings came on the market? That's an important metric that we track because it tells us what type of market we're in. 5 months of inventory is the baseline for a balanced market. So when we have 5 months of inventory on the market, we are in a balanced market. Anything less than 5 months, we are in a seller's market. Anything over 5 months, we are in a buyer's market. We are in the thralls of one of the craziest sellers markets in history in Chicagoland right now. There is no inventory for sale. And it makes sense because a lot of people who own property, if they have a mortgage, their mortgage rates could be sub 3 right now. They probably refinanced back when mortgage rates dipped down below 3%. So unless they have some significant event happening in their life that necessitates them to move, they're not selling. That being said, of course, if you have a great property in a great location, what we're seeing right now, every single listing that we're putting on the market so far this year is selling with multiple offers, every single one. Okay. If you own a property that has something unusual about it that makes it possibly more difficult to sell, for example, you're located on a busy street, you back up to an industrial complex, you have an unusual layout that not every buyer would necessarily be attracted to. This is the best opportunity for you to put your house on the market and sell it quickly for a premium price. And the reason for that is there is no inventory, so there is no competition available. If you list a home that has some sort of a unique selling point that may turn off buyers, again, a busy street, backing up to an industrial complex, an unusual layout, any of those factors, now is when you want to come on the market, because as buyers are looking, they're comparing your house to the other properties that are available, and there's really not a lot else available right now. So competition's extraordinarily low. This is one of the best opportunities for you to list your property, no matter what the situation, but particularly if you have a house that has something unusual. Realistically, people buy and sell based on what's going on in their personal lives, not what's going on in the market. And that's something that has been very apparent across the board. So let's get on a phone call and discuss your unique circumstances and try to figure out how I can help you achieve your goals. Give me a call, 630-297-5429. I would love to work through this with you and see what I can do to help you achieve your real estate goals in 2023. Talk to you soon.